Congresswoman, Florida property owners are sagging under the weight of surging property taxes and unsupportable insurance premium increases. What is the federal government's role in this situation, and what steps would you take if you are reelected?
Tom, first of all, states are the entity that regulate insurance rates. The federal government has never regulated insurance rates, and nor do most people who know insurance. They don't want the federal government to do this. States set the rates. States are the entities that the insurance companies go before. However, there is a model that we can follow, and one that I have introduced when we actually got a hearing on, and one that the chairman of the committee said is a very important bill and that he plans on putting on the agenda for next year. And that bill is one that creates a National Catastrophic Fund. And a National Catastrophic Fund is not paid for by taxpayer dollars, nor should it be. It should be paid for by the insurance companies. And that's exactly who would pay for the catastrophic insurance, the reinsurance under my bill. It wouldn't be tax dollars. That's an important differentiation. We need to make sure that the insurance companies are paying that. Now, if insurance companies loved me so much, I would have introduced a bill that would have had tax dollars paying for that. No, I believe that the insurance companies should pay for that. And by the way, insurance commissioners around the country, whether it's Florida, South Carolina, on the West Coast, those insurance commissioners support my bill because it's an excellent concept.
Mr. Russell, 1 minute.
Real estate folks and title folks and mortgage folks and ordinary homeowners support my plan, which has been on my website for the last 6 months. Her bill, which was recently passed, H.R. 5637, according to the Consumer Federation of America, establishes a new regulatory regime that is, at best, complex, difficult to implement, and at worst, much less effective. It creates serious risk for large buyers of insurance and consumers they serve. It's been called questionable in its constitutionality. And as far as industry executives, they offer an argument for drastic change that goes well beyond altered weather patterns, focuses especially on the need for federal and state backup for insurers. Well, my plan works for consumers, not for big business, big insurance, and that's available on my website, johnrussellforcongress.com. I'm running to serve you, not big business.
Congresswoman, 30 seconds.
All I can tell you, folks, is the National Association of Insurance Commissioners wouldn't support a bill if it wasn't helpful to the consumer. If it didn't lower insurance costs. It lowers insurance costs because it provides insurance, reinsurance from right here in our country, as opposed to buying it from, let's say Lloyd's of London at a very, very inflated price. Or maybe one of the companies down in the Bahamas, where at the end of the year they just distribute the proceeds to their stockholders. This is going to be money that's kept here in the United States. It's going to grow. It is not going to be distributed and spent at the end of the year, so that there can be a large pot that will grow for, God forbid, there be a national catastrophic situation.
Mr. Russell, 30 seconds.
Well, I just have to, all this stuff's available on the internet, and Consumer Federation of America, the Government Accounting Office analysis of this bill. And the bottom line is, it decreases regulatory oversight. The same sort of thing that Elliot Spitzer, who I'm sure you've heard of, up in New York State was working to combat. And these are sophisticated buyers of insurance that there's great concern over. Big companies that insure their automobile inventories, that sort of thing, car companies. What we need, this is regulatory super complexity, not regulatory simplification. It makes it easier for the insurance companies to perplex the consumer and take advantage of the consumer. And that's not what I'm about. That's friendly to big insurance. I'm friendly to people like me and you, the voters.
Mr. Moderator, he's confusing two bills. One is on homeowners insurance, the other is on surplus
No,
lines.
I'm just the one last
No,
week.
it's surplus lines, sir. I know the bill. I introduced
This
it.
is
You
surplus
didn't.
lines, right? This is
It's
surplus
You're
lines.
talking about surplus lines. I was talking about homeowners insurance and reinsurance. The surplus lines bill says that you're not going to take a product and ship it from one coast and have every single insurance commissioner have a little nip at it. What it says is that the state in which that product originated is going to be the state that will regulate and collect the money from that insurance company. Not a little Pac-Man going across the country.
Yes.
Okay, first off, I would encourage anyone to take a look at that bill and ask themselves, after just a mere glance, whether they thought the Congresswoman wrote that bill or an insurance industry attorney wrote that bill. I'm looking at her bill right here that was passed last week, and it's 5637, I think is the number. And that's what I'm talking about. I'm talking about working for big insurance, not on behalf of the insurance. You've had your chance to do what you could for this looming crisis. I'm asking the voters for my chance to work on your behalf, and the evidence is clear.
All right then.